Uh, yeah. So good evening
Good
and
evening, sir.
welcome.
Good evening.
Yeah, good evening and welcome everyone to Indian Bank's third quarter post results Concall. We have with us today Mr. S.L. Jain, MD and CEO of Indian Bank. Along with him, we have Mr. Imran Siddiqui, Executive Director, Mr. Ashwini Kumar, Executive Director, and Mr. Mahesh Kumar Bajaj, who has joined as an ED recently in the bank. So first, I would request you to briefly update us on the results. What is your take for the future, particularly in terms of growth, margins, asset quality? More so given the current scenario where we have seen that there is some kind of macro slowdown which is coming. On the deposit front, banks are to some extent struggling. So your specific comments on those areas will be really welcome.
Good evening. Good evening. Welcome to all analysts and investors in the post-result Q3 con call. As far as business of the bank is concerned, our business has grown by 9%, on which deposit has grown by 6% and advances have grown by 13%. Under deposit, our saving deposit has grown by 5% and the term deposit has grown by 8%. Under the credit, our RAM sector has grown by 12%. Under the RAM, retail has grown by 15%. Under retail, housing loan has grown by 12%. Jewel loan has grown by 23%. Auto loan has grown by 27%. Personal loan has grown by 35%. Again, agriculture growth is 15%. 53% of our agriculture is crop loan, which is growing at 17%. Investment credit is 54%, agri-allied 11%, and SHG has grown 56%. In MSME, we have grown by 6%, micro 16%, small 4%, and medium 14%. You must be seeing then from last 4-5 quarters, we are growing between 13 to 15% in the RAM segment and maintaining over 61-62% RAM share. Corporate has grown by 7%, but if you see the write-off of 5,000, 6,000, it is around again a 13-14% of a growth. So we are virtually growing 13-14% in the credits side. Now coming to the business profitability side, our operating profit has grown by 24%, and operating profit has grown on the strength of our NII growth, which is 25%. In addition to NII growth, there is a growth in non-interest income as well. So bad debt recovery has grown by 53%. Fee income has grown by 6%. If you see in 9 months, it is around 18%. Processing fees has grown by 20%. Cross-selling 81%. And Forex is just double, 99%. PSLC on a QOQ, it is coming down. But if you see in 9 months, we have grown there because what happened in the PSLC, the pricing is better in the first quarter is against the third quarter. So we have front loaded that, and in 9 months, our PSLC commission is better than this. As far as NPAs are concerned, our gross NPA has come down from 7.30 to 6.53, and net NPA has come down from 1.50 to 1%, and provision coverage ratios have improved to 93.59%. Capital adequacy slightly come down 15.74. Reason being that we are not adding the 9 months profit, whereas the business is growing. If I add the 9 months profit, it is 119 bips higher than this. So it is around a 17% of a number. So the capital wise, we are adequately capitalized. Net NPA has come down to 1%. Provision coverage has improved to 93.5 times or close to 94%. SMAs are 0.5 is against 0.5, 0.77. So in terms of numbers, it is around 1,100 crores. So there are 2-3 accounts where we have received the money subsequent to that debt. Otherwise, the collection efficiencies is 95%. We are maintaining the collection efficiency. Slightly SMA 2 is higher. One more reason is that what happened, the RBI has increased the repo rates. As a result, EMI has increased. But there are two options. One is to increase the EMI. Second is to increase the repayment period. We have gone for increase in EMI, and around in retail side, around 90% of the people we have taken a revised standing instructions or the NACH mandate, and that way we are again improving. As far as slippage is concerned, so this is the second quarter again. Our slippage is 1,313, whereas the recovery is 2,600, just double. Last quarter, our slippage was 2,400 and recovery was 3,255. At the beginning of the year, we said that we will recover 8,000 crores and a pro rata 2,000 per quarter. So as against 6,000 of 3 quarter, we are at 6,500, so close to 110% of a recovery, resulting in reduction of a gross and a net NPA. So the slippage of 1,192, 40% of this slippage is from the restructuring book, that is around 418 crore. What we have done this time, 634 crore provision we have created in standard asset to make the restructured book 15% is against the minimum regulatory requirement of 10% to strengthen our balance sheet. As far as our margins are concerned, our margin has improved and it is improving quarter on quarter. It has moved to 3.74 in December. Our ROA has also improved from 0.71 to 0.80. Our ROE has improved from 13.83 to 15.21. Cost income ratio is coming down from 44 to 43. So you see in all our parameters, we are having a better performance vis-a-vis the last quarter as well as the last year. So from business front, from the asset quality front, from the capital front, from the stress front, from the balance sheet strengthening side. In addition to that, we have made a 75 crore of a provision for wage revision for 2 months. We have also made 105 crore of a provision for PLI, production linked incentives, which will due on getting incremental in operating profit. The way we are moving in increase in operating profit, naturally you have to pay the PLI. So we have made a provision of PLI on this December quarter. Earlier we have made the provision in the March quarter, so we have front loaded that also. So this is all about profitability, business, asset quality, capital, collection efficiency, provisioning, and now I am open for question and answers.
Thank you, sir. Before we take up the questions, I had put up a question about the deposit growth being far lower at about just 6% for us, and that is true for the industry as well. So is basically that's more of a strategy that you want to consume the internal liquidity first and then raise the deposit rates and mobilize deposits, or is it more to do with that every bank is struggling and so we are also struggling on the deposit front?
You see, the 6% is on the current year. You see the deposit growth of our bank in the last year. Our deposit growth was 10%. All along, all people were having 7%, 8%. So we have in fact built the deposit in the last year itself. So on the incremental part, it is 6%. Of course, you are rightly said that banks are struggling for deposit. Basically, we too are mobilizing deposits, and in the last 9 months, we have opened around 27-28 lakhs new account. We have started open around 45% of the accounts are being opened through tablets. So when you are opening an account through tablet, naturally you are going to the institution's office and you are getting a quality customers. We are focusing on educational institutions. Or colleges, we are around more than 1,600 such fee collection and colleges account. We are focusing on that. We are focusing on temples. We are focusing on institutions. We are focusing on RERA in various sector where the deposits are more, because with the small deposit, you will not be able to achieve major number. We are too working on an institutional account. We are too working on a SNA account or a CNA account. So all areas, virtually we are opening the accounts. We too have created a deposit war room or office at a journal offices. In the morning, evening, we are having campaigns. The issue is very simple. We want to have a deposit at a lower rate of interest, which we are getting at 2.9 or 3. Whereas in the short-term market, the interest rates for the bulk deposit is around 7.5 to 8% in between. So the interest rate. So our endeavor is to get a better deposit, and that way we will be able to contain our cost. But going forward, this is a challenge, and we are fully geared up for that. We have created a team. We have created a government relationship vertical at various places, because we are very strong in UP. So Lucknow, we are in Tamil Nadu, Chennai, we are in Bangalore, Calcutta, Chandigarh, and various places we too are creating to get a bulk of these accounts. We know, sir, this is a challenge, because future is entirely dependent on the deposit accretion part. As far as the margin part, okay, let me answer your question first, right? So second question, you talked about the margins. So our MCLR based loans is 56%, and the remaining 7-8% is fixed, or otherwise is a repo link advances. So what happens? With the increase in the repo has been repriced, right? But the deposits, of course, earlier we used to take 1 year deposit at 5.5. Now we are taking at a 6.5, or a special deposit at a 7%. So with the repricing of the deposit, naturally the cost will increase. But the way our balance sheet is 56% MCLR. You see, here in the term deposit also 40% is a CASA, 60% is a term deposit where repricing will come. Here in MCLR also repricing will come. So the issue is only that in a MCLR we will be able to say increase by 1.2%, 1.3%. Here 1.4%, 1.5%. Some gaps, but this can be managed with the repricing or with the increased business growth or a product mix. These are the 3-4 strategies we will have to protect our margins. The next question was of asset quality. I already clarified you that our asset quality is getting better and better and better. And that this one is a slowdown, macro slowdown. You asked about that. Our bank is a retail bank. You see, 62% continuously we are growing in the retail side, and retail gold loan or housing loan. There's huge demand for housing. Now all the people are back to the offices, and when you see the housing, even the houses are not available virtually, the auto loans. So the growth is happening in all segment, and we are growing slowly in that. In corporate, we continue to remain choosy, because in the bond market, the spread has increased, whereas in the credit market, spread has not increased. So there's no point of taking money at a bulk deposit and giving it a lower rate where the margins are not adequate or not proper. So we remain selective in this quarter as well. Right, sir? I think in bulk deposit, but it's bulk deposit, of course, if we have a margin, we will take. If we will not have margin, naturally, we would like to control our cost and protect our margin and profitability.
Yeah, that's very good to hear, sir, that you are consuming internal liquidity and also focusing on margins rather than just the growth.
And our LCR is 138, 140 bips.
Amazing, sir, amazing. We'll take first question from Mr. Ajmera, but would request you to restrict maximum, 2 to 3 questions. Thereafter, you can always join the queue. Over to you, sir.
Hello, am I audible?
Yeah, Mr. Ajmera.
Yeah.
Sir, good evening, and again compliments to you, sir, for very good set of numbers and all-round growth, as you narrated in your address also just now, and the figure also speaks. So there is nothing much as far as the your overall growth is concerned, and you already answered about the corporate credit growth and the retail. I got a few information point and some specific information. One is, sir, about the NARCL. Now that the process started, and 4 accounts with 485 crore was reported by you last time, and 9 accounts were expected for 3,346 crore. So where do we stand on the NARCL front, and what is the status going to be in this quarter, January-March quarter, sir?
Okay, I'm telling you, sir, there are actually out of 43 account identified by the NARCL, 20 account pertains to us. And the aggregate book balance of these is around 5,200 crore. Out of this 20 account, 8 account where have balance of 3,300 crores, we have received the offer, right? Out of this 8 account, four account, actually amount is more or less crystallized. 4 is under the Swiss challenge and all this, right? So we are expected that these 4 accounts we should get money in the current quarter or in the beginning of the next quarter. Remaining 9 account where the offer is likely to receive because the due diligence and everything has happened. So that 9 account is around 900 crore. And 3 accounts where still the due diligence is in progress, that is 1,000 accounts. So the sum and substance, I can tell you that the first 8 out of this 4 account is more or less finalized where we should be able to get money, and 4 account where the Swiss challenge and everything will happen may take time.
But sir, this is the figure which is coming out now, and especially in that some cases of Swiss challenge. Do you think that we are going to get more than what we were expecting basically, originally?
In some of the accounts, what happens, in some of the accounts, even the bids are received even above the NARCL, right?
Yeah.
So that is a process, sir. That is a process of bidding. Na? So if we are getting a good price, naturally we'll go with that price. And you see, we as far as our bank's bottom line is concerned, of course, we are fully provided. But fact remains, we are interested in much higher and higher amount. And that always security, present value of the securities, what is the liquidation values, there are a number of considerations prior to deciding that.
No, that's point well taken, sir. Sir, there was in ACLGS account, what is the NPA number this quarter as against 363 crore you reported last time? Is it increased, the trend increased, or it is under control?
No, I'm telling you, we have given ECLGS of around close to 11,000 crore rupees, right?
Yes.
And the current balance is around 7,700. So around a 70% amount is. We are having around 439 crore of ECLGS NPA, 430 crore or so. But this is 430 crore is, of course, we will fully realize, but we have made provision.
Sir, this personal loan growth, you are seeing 35% and SSG 56%. So on personal loan, what is it? Is it the same corporate which are having accounts with their staff loans, or what kind of, how this growth is coming, and from where is it coming? 35-40% growth in personal loan portfolio?
Yeah, let me tell you. What happens, sir, you might have heard that we have come out with a digital lending products, right? So what yes, we have done, first we have started pre-approved personal loan to our salaried class, right? So that is around 4, 5, 6 months. Then we have increased it to professional and self-employed. Then we have increased it to our housing loan customer. Then we have increased to our auto loan customer. And I'm telling you, the delinquency is virtually nil NPA, virtually nil, and this is 5 or 6 because we, based on the CIBIL score, based on our internal benchmarks, we are giving this pre-approved personal loans and the product, and with the 3 clicks you can get this money credited in your account. So here what happens, your margins are also there, delinquency is not there, and we know the customer. So these are all ETB customers. Now, based on the experience, we will move to the NTB customer as well.
Sir, what about the credit cost, sir? Credit cost?
I'm telling you, hardly any NPA, sir. Hardly.
Okay.
Maybe 1 account or 2 accounts.
2-3 accounts only. And
okay. So our credit cost was 2% in the first quarter and the second quarter. Now it is 1.41 in the third quarter. Average is 1.80. Now you see my net NPA has come down 1%. So my credit cost is substantially come down in the next quarter.
Yeah, because that is what is actually where we were a little lacking actually, because the credit cost But now it is coming down, so it can give a good picture because your NPA is
Yeah,
also under control.
actually, what is the risk? Risk is from two sides, no, sir. One is a SMA, second one is a restructuring book. Restructuring, we have made 15% provision. This time, 634 crore of a provision we have made in the quarter.
And in restructure book, our collection efficiency is 90%. Even in yes. Yeah.
So,
can you give some color on the treasury operations, sir?
yeah.
Now
So,
that things are stabilized.
What we have done in treasury, sir, actually, 2-3 things we have done. One is that you see, some of the money which was in a treasury bull, also we have shifted around 3,000 crore to central or state government securities or a bond, right?
Yes, sir.
So that way, at the same time, we are having treasury profit as well in the current quarter, and the modified duration of AFS and HH is 2 point something, 2.2, and that PV01 is around 8.
And the yield on investment.
And yield on investment is improving, and what we are doing, sir,
basis from September quarter.
and yield, what we are doing, sir, that
Yeah.
10-year benchmark, if it is 7.35 plus, then what we are buying, or if it is less than that, we are selling. This is how we are making some money in there.
Trading profit of 130 odd crores we got in last quarter. Besides improvement in yield by 13 bips. Yeah.
Oh, that's great, sir. So sir, on the whole, I mean, everything looks very fine.
Yes,
I'll come back in the next round if the time permits. Thank you. Thanks a lot.
Thank you, Mr. Indra. Can you please take?
Yeah, hi. Hello, sir. Heartiest congratulations. So, my first question, Anand already touched upon it, but I would just like to again have your views on this. So, margins, domestic margins expanded 54 basis points sequentially, and your EBLR is not much higher than others. It is a good proportion, but it's not necessarily higher. So what really drove the margin expansion in domestic NIMs if our EBLR proportion is quite similar to other banks? That's my first question. And then what is the outlook in fourth quarter? Do they come off from here, and how do they behave in FY24?
Madam, there are two issues here. Of course, quarter on quarter, it is expansion of 54 bips. But you see, when in the last quarter, what happened, there was an interest reversal of 400 odd crores, resulting reduction in the margin. So that as against the interest reversal of around 450 crore in the last quarter, this quarter is on 140 crores. That is a one factor of this. And second one is that we have increased our MCLR also, and so therefore the margin has expanded, and in addition to that, business has also grown. Business mix and all. And outlook is that, madam, what is our last year margin is 2.91, right? We have told that we will protect 3%, then 3.1, 3.2, 3.74, and we think that the next quarter also, because the repo which was increased in 8th December is passed on only for 23 days now, another 3 months benefit we will get, and then the MCLR too we have increased, and the 56%. So this benefit we should get in the next quarter as well, partially.
Got it. So next quarter we are good on margins, and then in FY24, how do margins hold?
Actually, point is that how the margin will be improving. That's a 3 points. There are function of 2-3 things. One is your product mix. What kind of product mix you are having first, right? What happens, madam? There are retail credit, there is a wholesale credit, right? So if you do more wholesale credit, naturally your margin will be less because you will be in a AAA, AA, where the interest rates are lower than this. So this is one. Now slowly this corporate credit interest rates is also improving. So if we would have given 3 months or 6 months earlier, and for 1 year, then we could have continued the same interest rate. So now we remain selective and we have not grown too big on this. So naturally, with the product mix, also our interest rate increases. And you see one more thing, when your CASA is 40-60% in term liability and 56% is MCLR, both the things are matching. And with the increasing interest rate, with the increasing product margin, we of course there will not be that 3.74% margin, but we should be able to protect our margin slightly better than historically.
Got it, sir. So, and where do you see deposit and loan growth in FY24? Anyway, sir, your domestic CD ratio is 73%. So you would still have some room there, right?
So domestic credit growth depends on number of factors. One factor is, let us wait for the budget, what kind of infrastructure push government is giving to the infrastructure sector, right? What kind of public sectors are making investments in other investment, road, other sectors as well. But for us, I am telling you, for us, we will continue to grow 13-14 because we are a retail bank. We are not a bank which is having a 55% or 60% corporate and entirely dependent on corporate. We are 62% retail. So, and a stable bank, so we'll continue to grow.
Okay, sir. So, and what is this PLI provision you talked about? What is that? Why do you need that?
Madam, what happens is, per the existing agreement with the union and associations, when you are having a growth in operating profit of 15%, you are required to give 15 days PLI, extra salary. If your operating profit growth is between 10% to 15%, you have to give 10 days PLI. If your operating growth is more than 5% to 10%, you are required to give 5 days PLI. And that is PLI you have to pay on declaration of 31st March result.
Got it. So sorry. So operating of 15 and above is how much PLI you said? Sorry, sir.
If our operating profit will grow 15%, more than 15%, we are required to give 15 days PLI.
It's a profit-linked incentive.
That's
the profit-linked incentive
right?
to our employees. It is profit-linked incentive to our employees. This is applicable for all banks, not to me alone.
Yes.
All PSBs.
Got it. And so your wage provision is for 2 months this quarter, right?
Right, because the settlement is due from 1st November.
Yes. Okay, sir. Thank you so much.
Thank you, madam. Thank you.
Yeah, thank you, Maruk. Next question we have from Mona. Mona, please unmute yourself.
Hello. Hi, sir. Good evening, and thanks for the opportunity. So firstly, on the MCLR book of 56%, how much is linked to 1 year and 6 month MCLR? If you could share that data.
Major part should be with 1 year MCLR, but major part of that. Of late, what we started doing that we started linking with the 3 months because we are an increasing interest scenario, right?
Mm-hmm.
So as on date, suppose out of 56%, 40% is on a 1 year MCLR. So this will come for repricing. What happens in last 6 months, we moved ourselves from 1 month to the 3 month or a 6 month or a 1 month because in an increasing interest scenario, there is no point of giving 1 month MCLR. But the earlier one will come for repricing and will take the call.
Correct, sure. And on the personal loan book, PL book, what are the yields you have?
We are having around 10% of a yield.
10.5 to 11%.
Okay. And I missed the wage revision number. How much we have provided this quarter?
Around 75 crore, 74.90 or so. 75 crore, madam.
Okay. And just finally, the balance sheet data is not available this quarter in the PPT. So if you could share the borrowing, investment and cash quantums at the end of quarter.
That our CFO will tell, madam, because we are required to submit on a half-yearly basis, na? That is why it may not be available here. That is as per the regulatory guidelines. But number will give no problem. Separately we'll share, madam. The madam will share this, madam.
Sure. On the agri book, what is the share of gold loans within that?
In agri is a 53%, madam. And 53%, and that part is growing 17%. And we actually, what we have done, we have identified 650 branches for gold, wherever we have placed the gold loan champions, and now with the digital gold loan renewal, right? The keratometer for doubly checking the quality of gold. So we are focusing on that.
Sure. And just finally on the restructured book, if I see you've given a 15,000 crore total restructured outstanding. This is inclusive of the MSME restructuring of 2,800 crore in the notes to accounts, or exclusive of that?
These are basically RP1 and RP2 restructuring, and this major part is already a part of that also. There's overlapping there. What I told madam, this number was 16,000 crore, right? So as on date, it is a 15,200, right? And 400 crore has been slipped. So it means 96% of our book is behaving good, because only 300-400 crore has virtually slipped. But as a proactive measure, we have made the additional provision of 600 crore in the quarter.
Right. So I get that. I'm just trying to understand what would be the total outstanding book, X of any overlaps between MSME and the, COVID provisioning 1 and 2. Would it be closer to 17,000 crore, or would it be around 15,000?
Actually, this 15,200 now, that is a 2,800. So if you take a 50%, maybe 1,000 crore more, 1,500 crore more, not beyond that.
Okay, sure, sir. And
okay,
if you could share
Mona, sorry, we'll have to take other questions. Yeah, next question we have from Dikshit.
Thanks for the opportunity. Just 3 questions. Firstly, you mentioned that we will be growing at 13-14% on the advances side. Can you just give us some target on the deposit side? How do you see the growth? My second question is on the credit cost side. So, as you have mentioned, that SMA 1 and 2 is quite low, and now only our net NPA is just 4,000 crore. So how do you see provisions in the next year? Not in the Q4, but FY24. And my last question is on the tax rate. So from FY24, we will come to the normal tax rate, or still we will not come?
No, your one point is that your credit cost, right? 4,000 crores. So naturally, going forward, our credit cost will be substantially lower than what is at present, right? At present, it is 1.8%, right? This is sure virtually, because you can't have a credit cost more than your net NPA, and net NPA itself is 1%. So this is sure, sir. Now, second point you talked about is the credit growth vis-a-vis deposit growth, right?
Yeah.
So we will be taking the deposit based on the credit growth, and our focus will always be on maintaining 40-41% CASA. So deposit growth will be based on the need only. Otherwise, there is no point of taking money at a bulk rate 7-8% and not having proper margin, because we have to add the CRR and the DICC cost thereon. So we will take the deposit based on the credit need. The third point you talked about the tax rate. So next year will be on a normal tax rate, but the benefit which was available partially in the current year will be over in the current year.
Okay, thank you.
Yeah, thank you, Dikshit. Next question we have from Satya. Satya, please unmute yourself.
Thank you, Mr. Jain. I think you just answered the questions I had for you. So I'll lower my hand. Thank you.
Thank you. Next question we have from Jay. Jay, please unmute yourself.
Yeah, hi sir, good evening. I have a couple of questions. First is, sir, your note number 17, June 7 circular, right, which still has some 14,000 crores of NPA, and where we have, if I read it correct, the PCR seems to be less than 10% at around 1,360 crores. So, what does this mean, sir? Does this mean that, as and when, I mean, you may have to require more provisioning on this pool of assets going forward?
No, note number 17 is very clear, sir. Amount of loan to be classified as NPA 14,731. Amount of loan classified as NPA is 14,731. Nothing 100% provided has been classified as NPA.
No, they are classified as NPA, but it's the other column says that the provisions, additional provision required is 1,360, which we have already done. But what, I mean, the total provisions for this pool of assets would be substantially higher, right? It is not.
No. You see, there are two things. That is what is this 7th June circular? This talks about that if you are not transferred, you have not found a resolution plan within 6 months, then you have to refer it to the NCLT, and if you have not referred it to the NCLT, you are required to make a higher provision of 20% or 30%, right? This is the circular, sir.
Right.
Now, where I stand, my provision coverage is 94. My provision other than the PWA is 85%. My provision,
right.
And this is the provision over and above which we have fully provided.
Over and above.
Okay.
So no issue there, no issue here.
Sure, sir. And secondly, on your slippages, sir, I mean, this quarter slippages have declined substantially. I think, agri slippages have come down because your cycle is slightly different from other banks. But how should we look at the slippages in a normalized situation, let's say X of agri, or maybe in near terms on full year 24? Because your initial guidance was slightly higher. We have done better than that. So how should we look at slippages going forward?
We are always conservative in giving guidance. That is a problem. And we always do better than what we say. Right? So now point is that a slippage part. The slippage is governed by 2-3 things, sir. What is your collection efficiency? So collection efficiency is 94, 95 continuing. Second, what is your SMA 1 and 2? SMA 1 and 2 is slightly higher because of the reason I told you, because of the EMI part, because of the revision in EMI, which we are following up. And that therefore we are not seeing much worry here at all. Much worry here for that further slippages, higher slippage, right? Slippage will always be there, but higher slippage.
So is this the new?
And you see the corporate and measure is in corporate. In agri side, 53% is gold, and again that 13% SHG is where already 1 or 2%, and we're not beyond that. And all over, you see the slippages which came is first 1,000 from the restructuring book, then 469, then 419. Major part is coming from the restructuring book, which too is coming down. So we are not seeing worry here, sir.
No, of course, sir, nothing to worry, but I was trying to understand what would be the normalized slippages. If I look at last 3 quarters, slippages are like 3,000, 2,500, and now 1,300, right? So, I mean, what should be the business as usual or normalized slippages, considering we have been retail, considering the business.
So last quarter slippage mainly because of agri book, right?
Correct.
1,000 crore is from the agri book.
Correct.
Which is not there.
Right. Okay. And then, sir, the 2 questions first on MCLR, right? So it is right that you can keep rising MCLR as per the cost of deposit. But what I wanted to understand is, how much of the MCLR hike actually gets transmitted, right? Because this MCLR would be applicable to corporate borrowers, and they would have other avenues, or they can negotiate as well, right? The transmission may not be as 100% as under EBLR. So in your sense, let's say in last 12 months, you would have hiked MCLR by 125, 130 basis point. What would be the actual MCLR pass on? Some of the customer may negotiate, may renegotiate, or something else, spread can change. So out of 100 basis point MCLR that you announce higher, how much actually gets transmitted?
Your question is correct, sir. Now, my point is that suppose my cost has increased, I have to pass on. So
Right.
if you are not ready to give me an increased cost, then we say, we allow them to go. Then we will grow in an area where we are having margins, right? So you see that is why corporate growth is 7%, whereas the other growth is 15%. So this is again, I have to take care of my margins, my profitability.
Correct. No, so I am not asking for future. I'm asking in the last 12 months, how much, let's say 100 basis point, 130 basis point MCLR that you have announced. How, I mean,
So you see, sir, our growth, credit growth is increasing. Growth is happening, right? And if I add the write-off part around 4 or 5%, it is of 12 or 13%. So point is that when you are able to grow 12 or 30%, then you are successful in passing on the increased cost, na? And you are maintaining your margins as well. But not to 100%, maybe 60%, 70%, 80%. It depends, sir. Then we will find some other opportunities.
Right.
And you see, but you see my book, 88, A, 888 is continuously increasing.
Right. Okay, understood. And lastly, sir, on your co-lending arrangement with Rupeek, right? So, if you can elaborate a bit, is this state specific, or it is like multiple states where you have this arrangement? Because how does Rupeek differentiates between you and some of the other private banks where they have the similar arrangement?
My issue is very simple, sir. Somebody is coming for a gold loan, I will be with him for a co-lending, provided he deposit gold at the end of the day to me. So my risk is hedged.
Yeah. But sir,
What is the benefit to the? What is the benefit? But if it's the benefit to the customer is that he's not required to keep the gold, first point, and then he can have a higher margin. But point is that because we are not having the reach at all places, which the NBFCs is having. NBFC is always having the benefit of a reach. They can go to the any interior part where I'm not having the branch. But for me, it makes a sense because I'm getting some margin and my risk is hedged.
No, but this is a pan-India tie-up, right? It is not a state-specific tie-up.
Yeah, it's a pan-India tie-up, but initially we started with a few branches, and going forward with having experience with them, we will increase number of branches. But there's no restriction in going in any geography.
Right. No, what I was trying to understand is how would Rupeek, I mean, do you have a separate firm guidelines that, this kind of a loans should come to Indian Bank and this kind of a loan may go to some private banks which also have the similar arrangement with
It's
Rupeek?
not, we have told him what kind of loan we will have. We have our own agreement with them. And what will be the SOP? What they are doing with the others, that's their call only. That is
Bank specific agreement with them. But for me, specified branches, gold to be deposited with me in the evening.
Yes, in the evening.
Then only we'll return some money. Simple. For me, it is very simple.
Right. And last question, sir, if you can provide what is the outstanding provisions that we have on the restructured loans, and that will be helpful. I think the number we have given some 15,000 crore, but what is the outstanding?
15% is 2,225 to hai na. That is for 15% of 15,000. Okay. Plus we are having for other restructuring book, madam.
Yes. Totally 2,582, including the other.
2,582. Around 2,600 crore of provision we are.
Okay. Yeah. Thank you, sir. I will come back. Thank you.
Yeah, thank you, Jay. We have next question from Mr. Ajmera. It's a follow-up question.
Thanks for giving this opportunity again. Sir, I have got just a small 1 or 2 data point and some guidelines. We are, sir, on CASA front, we are around 40%, 40.4 or 39.5, 40.4. The bank has any strategy to increase the CASA deposits and making some bigger targets, and then preparing a roadmap for that we may go to 42.5 or 45, or is there any thought around that, increasing the overall CASA of the bank?
It's our CASA 40.40 is in total book. In the domestic side, we are having a CASA of 41.18, right?
Yes.
Our endeavor is always to cross 42.5 immediately, but point is that what happens in the interest rate increases, people move their deposit from saving deposit to term deposit because the interest differential have increased, right? So this is the one challenge, but our endeavor will always be to get a quality saving bank account. Now we are giving insurance also on our mobile. Shortly we will be giving wealth management also in our mobile. We will be having more mobile banking registration. So we will try to engage people more on our apps. As a result, they will be having a more balances, right? But our endeavor will always be to improve from this level.
And my second question was connected with this only, that the income from third-party products and insurance business, mutual fund distribution business, do we have a separate vertical for that to monitor and to grow it with various other channels which comes in the non-interest income?
We are having separate teams and separate tie-up. We are having insurance tie-up, number of mutual funds tie-up, insurance life or non-life, all these type-up. And there are time to time we are reviewing them also. We are calling them also. And our income on account of that is increasing. Ashwin, you can add.
Our income during the 9 months period from the cross-selling is around 88 crore, as against 51 crore last year. So we have a team here which are looking after these third-party products exclusively, and similarly at the field level they also. So our mutual fund platform is available. All our customers can onboard through our mutual fund platform, and on that platform all mutual funds are available. Broking account we are also offering to the customers. AIF we are also offering to the customers. So with all that bouquet, even all insurance, general insurance, life insurance, health insurance, that have been made live on our app as well. So mutual fund is available through our app. Insurance products are available through app, and our other third-party product, everything is available through app. So dedicated vertical here in the field, everything is helping us to increase our. So 86%, YY 73% increase is there in this 9 months period.
But there are huge scope to do it. Though we have grown by 73%, but there are huge scope, and we are focusing on that. And we want to have a digital journey to the customer. Then customer will have a better experience.
So, sir, what was my point was, yes, compliments for this such an increase. But the target-based processes yields better results because you are a big bank now. Good.
No, we are given 100% target. Ajmera ji, your target is 100%. We could achieve 73%. So we want to increase it further, but you can't do it.
Scope is huge.
Slowly we are building.
Culture, we are bringing that culture in.
Yeah, thank you. We'll take last question from Maruk.
Yeah, hi sir. So could you quantify the PLI provisions already made?
105 crore, madam.
Sorry?
105 crore.
I'm sorry, I didn't.
105.
105. Okay, and it was made in this quarter only?
Yes, madam.
Okay, sir. Thank you.
So one question related to that, which has come in the chat box, is that whether we will have to make similar kind of provisions even in fourth quarter if the performance remains strong, or basically it comes with a lag.
No, point is that we have made 75% of the provision. No, only 25% is to be made.
On PLI.
3 quarter already we have made the provision. Only 25% of that.
Correct.
Okay, so 3 quarter basically.
We have made on a pro rata basis, sir. Pro rata basis.
So for 3 quarters,
we have
made provision. Anandji, for 3 quarters, we have made provision in this quarter.
Last to last, 35 crore we are required to make.
In the fourth quarter. Okay.
Yes.
Okay. Sure, sir. That's helpful. I think, sir, you had some time constraints, so we'll just take that as the last question. And if you have any concluding remarks to make.
Thank you very much to all our analysts, investors for continuous support to the bank, and thank you for active interest in the bank.
Thank you very much.
Thanks, sir.
Thank you, sir, and kindly keep supporting us.
Yes, sir. We are always there, sir.
Thank you, sir. Thank you, sir. Thank you, sir.
Okay. Thanks a lot.
Yeah, that's it from me. Thanks a lot. Have a nice evening.
Thank you, Anand.